You're listening to AI PRISM from Seoul Economic Daily.
It's Monday, May 18. I'd like to share some thoughts about Markets Daily. We've got a lot of ground to cover today with reporting from the Seoul Economic Daily.
Yeah, there is a ton of data to dig into.
Right. And our mission for this deep dive is to, unpack what is really happening beneath the surface of Korea's 2026 equity rally. Because, if you just glance at the headlines, the market looks really strong.
Oh, absolutely.
But when you actually trace the capital flows, you see these three completely contradictory currents. It is a fascinating puzzle for anyone trying to navigate the markets right now.
For sure. It's complicated out there.
So let's start with the brokerages. Korea's top 10 brokerages just posted a record Q1 net profit of 4.33 trillion won.
Which is just over $3.1 billion US.
Right, 3.1 billion. And a massive chunk of that is coming from margin loan interest. It hit 600 billion won, or about 430 million US dollars.
Yeah, and that's being entirely fueled by Bit2, right?
Exactly. Bit2, which is the local term for leveraged retail trading. So retail is borrowing heavily. But here's the piece of data that just stopped me in my tracks.
Okay, what is it?
Despite those massive record-breaking profits, Korean brokerage ETFs just dropped 10% in a single week. How does that math work?
Well, you're seeing the high beta paradox in real time. We have to remember that markets are always forward-looking.
Right.
So yes, the brokerages made billions last quarter, but those profits are backward-looking. Brokerage ETFs act as heavily leveraged proxies for the broader KOSPI index itself.
Oh, I see.
Yeah, so because these retail traders are so aggressively leveraged with Bit2, the market is basically pricing in the future risk of a correction.
Okay, let me make sure I'm getting this. It's like a casino.
Exactly.
The house is currently making money hand over fist because all the players are borrowing money to place bets. But the second the broader market looks shaky, investors panic and sell the casino stock.
Spot on. They aren't looking at today's profits.
Right, they're terrified the players are about to go bust tomorrow.
Yeah. When the overall market goes up, these brokerage ETFs amplify those gains. But if sentiment even slightly shifts, they aggressively overshoot the market on the way down.
Which naturally makes you wonder, if the institutional players see these retail traders gambling on margin and they see the casino stock dropping, where are they putting their money?
They're definitely running for cover.
Yeah, I was looking at the numbers for Billionfold Asset Management, and their growth is insane. A year ago, their assets under management sat at 250 billion won.
About 180 million US dollars.
Right, and today, 2 trillion won, or roughly 1.4 billion US dollars. That is an 8 times explosion in just 12 months.
It's wild.
What exactly are they doing to attract all that capital?
They're offering a safe harbor through a strict market-neutral strategy. Instead of betting on whether the KOSPI goes up or down, Billionfold perfectly balances their long and short positions.
Right, so they buy undervalued stocks and short sell overvalued ones.
In equal measure, yeah. This means they have almost zero net exposure to the market's actual direction.
So they're completely isolated from the chaos.
Precisely. We actually saw the mechanics of this during March's macro shock when the KOSPI crashed 19%.
Oh, right.
Because of that perfectly balanced approach, Billionfold actually gained 0.82%. Institutions, especially pension funds, are terrified of the current volatility.
So they're using this to replace bonds.
Yeah, exactly. Bonds just aren't providing reliable downside protection anymore.
Okay, so if retail traders are leveraging up at home and the smart institutional money is defensively hedging, what about the rest of the retail cash?
Well, a lot of it is just leaving the country entirely.
Right. Korean retail holdings in U.S. stocks just crossed the 200.14 billion U.S. dollar mark. That's around 300.27 trillion won.
This is the realm of the Seoul, right?
Yes, the Seoul, or Western ants. That's the nickname for Korean retail investors who specifically buy up foreign stocks.
And this is where we see a fascinating clash between market gravity and government policy. Earlier this year, regulators tried to stop this capital flight using the RIA.
The return investment account.
Right. It offered direct capital gains tax relief to retail investors if they brought their U.S. stock cash back into Korean equities. And, in the first quarter, it actually seemed to be working.
Wait, let me challenge that. Because right now, that RIA incentive has completely faded.
It has, yeah.
If the government is literally handing out capital gains tax breaks, and it still fails to keep money in the country because it gets overpowered by a U.S. tech rally, Doesn't that prove domestic market stimulus is basically powerless against global momentum?
I mean, that's the harsh reality regulators are waking up to. You can offer all the tax incentives you want, but you cannot legislate returns.
Right.
When U.S. names like Intel and those big memory ETFs are surging, capital will flow toward that momentum regardless of the tax friction. The tax break just isn't big enough to offset the missed gains of a U.S. bull market.
So just putting the pieces together for you. Retail is heavily leveraged at home. Institutions are quietly paying a premium to hedge neutrally, and a massive block of retail cash is just fleeing abroad to chase tech momentum.
Which leaves us with a final lingering question to think about.
Oh, what's that?
With retail leverage locally, institutions hedging neutrally, and other retail cash fleeing abroad, you have to consider whose capital is actually on the right side of the trade when the next macro shock hits.
That's today's AI PRISM Markets Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a One Eye for award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.